Clemens Jungsthöfel is the CEO of Hannover Re and joins us live on the show now. Clemens, very good to have you with us. Walk us through the quarter then.
Yes, good morning and thank you for having us again on the program. Yes, as you said, we had a very good first half year, I would say, also a very good second quarter. So I'd say it was a successful half year with the operating income being quite strong in both business groups. So in our property and casualty reinsurance business, as well as in the life and health reinsurance business, we've seen strong underlying profitability. Our investment performance also contributed quite stably to our earnings. So overall, we are indeed well on track to deliver on our full year target, which is more than 2.7 billion of net earnings for the group. I should say that we've used the underlying strong profitability to further strengthen the resilience in our balance sheet, which is very important, particularly in more challenging market environments, because it's going to support our future earnings growth. So this is also worth mentioning.
In terms of payouts that you're having to make, has there been any change, significant change this year? Particularly, I have in mind in terms of natural weather effects, natural disasters. We've heard about floodings, we've got wildfires. What's the picture that you are gleaning from what you're seeing in your numbers?
Yeah, very good point. And thank you for mentioning that, because it looks like across the industry that it's been a rather benign Nat Cat first half year due to the large losses that we were budgeting. We ourselves came in below the budgeted number for the first half year. But that's just, if you just look at the landscape, and you mentioned a couple of the perils, so we see extreme weather events, we see earthquakes, we see wildfires, droughts. So the risk landscape is still quite severe. And if you just look at the recent picture of the earthquakes, devastating pictures there. So the risk landscape is still very serious. It's a very volatile environment. So the numbers shouldn't indicate that the risk landscape has changed to the positive. On the contrary, as you mentioned, in our case, we've seen a couple of large Nat Cat events in the first half years. To start with, Winter Storm Fern in the US and in Canada. We've seen earthquakes, wildfires, etc. All that will find its way into our numbers.
Clemens, I thought that was fascinating, the comment you made about risk and whether anything's changed. In terms of your strategy around climate, we've had a whole conversation this morning about river levels and some of the other challenges we know on a daily basis. There are wildfires, there's food security risks. Has anything changed in terms of the strategic approach that the business will have to climate change?
No, on the contrary. I mean, we need to be aware of the changes of the climate change, the perils changes that come with it. So what we've seen in recent years, tendency to away a bit from large Nat Cat loss events into more what we would call secondary perils, like wildfires, like droughts, floodings, etc. So that is still the case. I mean, in essence, this is what we are there for as reinsurers, to help our clients, our cedents, to navigate that increased volatility in relation to climate events, and ultimately to help society to at least mitigate economic risks coming with this and really helping to stabilize it. That's what we are there for. We constantly need to adapt our models. That's what we are doing on a yearly basis. We adapt our modeling, our prices, etc. And together with preventative measures, I think we should, as an industry, be helpful and be able to tackle this together with all parties involved.
Can I get to some of the price action? For many years, we've been talking about the inflationary impact on insurance, and I can see at this line saying prices on renewed business fell 4.5% on inflation and risk-adjusted basis. Just unravel that. What is happening here? Is it suggesting we're coming off some of the heat and the inflation pressures on insurance products?
Yes, I think we need to look at this in the larger sort of view of the reinsurance cycle. So we've seen quite substantial price increases improvements in terms and conditions in more recent years, which have led to the fact that, and actually based on a prolonged time of soft reinsurance markets with prices that were not always adequate. So we've seen strengthening of prices, and prices now coming down due to the fact that there is quite strong earnings in the industry, that there is capacity in the industry, both from traditional and from alternative capital. So prices coming down from a peak level, I'd say, still being adequate. And therefore, we always need to make sure that prices remain adequate, but on a broad base, we still believe that that is the case. And that's why we were willing to provide coverage, to support our clients in tackling those issues.
Clemens, I can see at the same time that volume went up. So what does that suggest about the amount of demand for product?
Yes, I think the demand is, it's twofold. Some of our cedents have, due to their stable balance sheet, strong balance sheet, have retained business, so not ceding it out. Others, and we spoke about the perils, we spoke about the risk landscape, there is still demand for protection. I think we as Hannover Re have supported our clients for many years on a broad base, so the strong client relationships, the partnership approach that we have, where we support our clients on a broad basis, as well as our substantially lower cost ratio than the industry with our lean operating model. I think that allowed us to grow our book, to gain further market share, and to support our clients.
Clemens, I want to ask you a question that may not be overly futuristic, even though it may sound like it, but I want to talk about mobility in future, because we're going to have the CEO of Wave on the show a little bit later on, talking about autonomous cars being rolled out into major cities, not just San Francisco, but also London. I gather this is going to change the ownership structure of cars in future if we see wide-scale adoption at some point of autonomous. No doubt this is a huge insurance issue as to who you insure, how you insure this type of technology, who has liability. How is the industry, how is Hannover Re thinking about some of these big changes, structural changes for the industry?
Yes, it will not be autonomous cars. It will generally the speed of technology changes that we see coming from AI, coming from autonomous driving is very rapid and is increasing at a breathtaking speed, I would say, in some areas. So we need to stay close to our clients, to the ultimate policyholders, to see what is the needs. The perils, the risk might change from just, let's say in your example, from insuring that car itself to more product liability or liability cases. So we are going to adapt, we are going to explore together with our cedents to come up with options. Clear is we are going to be part of the risk-taking solution. Our industry will play a role also in trying to develop new products to support that environment and that development, which will clearly happen.
Okay, Clemens, thank you very much for your time. Clemens Jungsthöfel, CEO of Hannover Re.